Good afternoon, everybody, and welcome to LendIt Fintech's weekly news roundup. My name is Peter Renton, chairman and co-founder of LendIt Fintech, and I'm here joined by my colleague Todd Anderson and Andrew Dix of Crowdfund Insider. How are you doing, Andrew?
I'm doing well. Thank you, Peter. Good to see you, Todd.
Yeah, how you doing, Todd?
Yeah, doing well.
Okay, well, let's get into it. Lots of interesting news to cover this week. So I want to talk about the news that came out this morning. It's a little UK centric, but I think it's interesting because it's really the America's largest bank, really getting serious about the UK. JP Morgan has announced it's going to buy Nutmeg, which was really, I think they're the largest digital wealth manager in the UK. They certainly were when I last checked.
I think they still would be considered that.
Yeah. So they not huge. They got $3.5 billion under management, 140,000 customers. Yeah, JP Morgan is said they're going to launch a digital bank, and I think they said that in January. They're going to launch a digital bank in the UK. They tried in the US, didn't work, so trying the UK. There was no official number on the transaction that was said to be about £1 billion, which is it's not chump change. Certainly for the employees and founders of Nutmeg. And I remember I've actually been in Nutmeg's office probably 3 or 4 years ago now, and they've always been I think they've really been the leader in this space in the UK for some time. So JP Morgan decided it was time to get serious about digital banking. And what do you guys think about this acquisition?
I think it's pretty fascinating to see JP Morgan expand to UK as Citi is kind of coming back home to the US and getting out of certain markets. So which banks are going to which markets is pretty fascinating. It's JP Morgan clearly wants to start a brand name outside the US. And the only brand name outside the US they have is probably in their investment banking business. And so retail-wise, they clearly see an opportunity, and part of that probably has to do with some of the success that Goldman's had with Marcus, and seeing some of that and saying, all right, this is a prime time for us to go after the UK with so much going on digitally now, and try to gain a foothold in a market that they probably would normally just ignore.
Yeah, I say on first blush, I give this an A+. Smart move for JPM. I love the fact that they're crossing the Atlantic to build a digital banking brand from the ground up, thus avoiding the innovator's dilemma, right?
Right.
Because it seems to me that they struggled in the US to create their own brand here. And as you know, the innovator's dilemma is where entrenched executives don't like the competition. But here they have an opportunity to really do a greenfield bank, and by purchasing Nutmeg, it gives them a step up in the right direction. I believe that Nutmeg was also providing some services for Marcus. If I am
there's also a Hong Kong connection with Nutmeg as well.
Yeah, I mean, there's some interesting moving parts there. We all know the UK regulatory environment is a lot more amenable to innovation than other jurisdictions like the US, and I think that this is a good move for JPM, and I'm kind of excited to watch it grow. Of note is the fact that Nutmeg raised money on Crowdcube a couple years ago, and so there's about 2,000 retail investors that bought a piece of the action at a valuation of $250 million, $250 million. So I know that over the coming days, any returns they may generate should be, percolating out. So I'm curious about that.
That's interesting. Yeah. So got some people maybe got a 4x on their money. That's not
a bunch of the UK fintechs have gone that route to as a marketing ploy. To gain a loyal following. I think Monzo, Revolut, a few others have done it as well.
Absolutely correct, Todd. Yeah.
Okay, let's move on. I want to talk about Kabbage. This is actually, I read this first on Crowdfund Insider, Andrew. I think it was your piece. They finally launched their digital checking account. Kabbage, remember they announced this product in July of last year. I'm sure you wrote about it then as well. But then, then they had the Amex acquisition, and they've relaunching it. It looks to be pretty similar to what Kabbage actually said in their initial offering, and good to see. What was interesting is it's not Amex checking. This is Kabbage checking. They decided that Amex is not going to be part of the actual brand. Although when you go to the site for Kabbage checking, you'll see Amex all over that page. But
I think that's a super smart move, because the Kabbage customers didn't sign up for Amex; they signed up for Kabbage, and that experience, that fintech connection. And so I think at least for now, keeping the Kabbage name, I think, is a smart move overall.
I'd agree with that. But honestly, I think Amex needs to pick up the pace.
Yeah,
I think
they do.
They're falling behind in what they should be and need to be doing to cater to the digital consumer of today and tomorrow. And they have a great brand in Kabbage, and they should have been moving faster with that. So, whereas I gave the last, acquisition or move an A+, this one gets a C+ at best.
Right. Well, so far, I think that's the challenge, because, Kabbage, it's interesting to me that, Kabbage is really the stronger brand in small business in some ways. And it's like Gina Taylor-Cotter, who you had, I've had her on the podcast. You had a quote from her. I mean, her title is Senior Vice President of Strategy and Business Operations at Kabbage. She's an American Express person, and that was really interesting to me to see that. Like Amex, they've got, small businesses. They've got all these small businesses that are offering their credit card. There are merchants that are on their platform, and there's so much being offered to these small businesses now. And what's Kabbage doing? So what's American Express doing? They finally got a checking account, but they really should be giving a full suite of products. It needs to happen in the next year or two at the latest.
I agree.
Yeah. Okay. Let's move on to another of your stories, Andrew. Another one I read first on Crowdfund Insider. Wise, formerly TransferWise. I'm still getting used to that name.
Me too.
They've chosen the London Stock Exchange for their listing. They're going to do a direct listing. They considered both New York and London, and obviously they're a European company, so London won out. They're going to do a direct listing, not going to raise any capital. I feel like it's another big fintech going public. There's just this is the year of the public fintech company.
Yeah, I have to, full disclosure here. I've been a customer of TransferWise, now Wise, for a number of years now, and I absolutely love it. So I'm a bit biased here. I see Wise as an emerging bank, a stealth bank, and we frequently call it that, because of the services they're offering now and the services we know they're going to offer tomorrow. You're right, big win for the LLC to get the listing. This is a company that didn't need to raise capital. It's been profitable for, I think, 4 years now, quite some time. Really just an incredibly, cool service that has legs to grow and expand globally at an accelerated pace. The only downside to this, it just kind of highlights is to they didn't really need to go public, but they're at a certain size. They say, well, now it's time, and give people a chance to exit. I think that both the U.S. and the UK need to figure out a way to get companies listed publicly sooner, because you have big companies like Wise that they didn't need to. Why do it?
Right.
Agreed.
Yeah, and I am also a TransferWise user. Every time I send money internationally, I am using TransferWise's service, and it's so much better, because I used to transfer money back and forth between Australia and the US, and God, that was a pain. But now it's a piece of cake, and really, really like their service.
They're one of the first ones that kind of mastered that, smooth transfer of funds. And I think, Revolut kind of launched off of, and in large ways succeeded because of TransferWise earlier success.
Yeah.
And so it's, I think it's a interesting move, kind of a surprise, at least at this stage. They, it kind of just popped up out of nowhere that they were going to go with direct listing. So, but I think a lot of it has to do probably with exits.
Yeah. Okay, moving on. I want to talk about Cross River Bank. They announced this week that they have a new venture capital arm. It's actually not that new. It's a year old, and I actually wrote a piece on it, just published a couple hours ago, on Cross River. It's Cross River Digital Ventures, and that's their new. They've already made three Actually, they've made more than three investments. There's three investments that are actually public that they can talk about, and they've got others, and there's others that are in the works. They're entering a crowded field of venture capital for fintech companies. More money is coming in, and you see like Bain raised, I think it was $1 billion, 1.4, I think was it, $1 billion new fund that's going to be primarily fintech. I mean, there's so much. But Cross River has an advantage in some ways because they see a lot of these companies at early stage when they're really just getting going, and they need a bank. They need a bank to either do a lending deal or payments or some sort of bank partnership. And so they get really in-depth due diligence they're able to do on these companies, and so they've got a good view, but it's a competitive field.
There was another firm recently that raised a venture fund that was a surprise. I forget who it was, but I think it's a fintech that maybe Plaid. One of those companies also raised is now making venture investments.
SoFi is doing it. I know
SoFi
that
as well. So it's becoming a bit of a trend. And to be honest with you, as we're coming out of the pandemic, I think we're going to see, this for the next few years. You're going to see a lot of big bets made on companies taking advantage of themes and trends they saw the last 18 months and to try to capitalize on those. And I think we're going to see a lot of big bets. Some are going to, fail terribly, but some will be the next, SoFi, Revolut, or whoever you want to name there, Wise. That will be the next cohort of companies in 5 to 7 years.
Yeah, I agree with you, Todd. I think it could go on even longer. And I read your article today, Peter. Thank you for doing that. But I think the point that you made is, spot on. The fact that they're at the head of the line for, some of these firms because they have that inside perspective, and that's key. And I think that's going to help them be a success. I looked quickly at the companies that they have already invested in, and none of them really, popped out to me. But it seems like I believe you said that they're looking more in payments and embedded finance is kind of their scope right now.
Yeah, and they'll continue to do lending. I mean, Innovative Assessments is one of Todd's favorite companies, I think, isn't it, Todd?
Yes.
They always want to speak. They've been they want to speak at every event we do.
Yeah, Saul Fine is the
And I think we have had him speak. And they've been in our pitcher competition. We've had him speak once or twice, but
to me, it's the natural evolution. They're already. You mentioned it, Peter. They've done due diligence already, so why not make some bets themselves? And then it's like a venture fund who said, why send them to a capital provider for debt? Why not just also provide some debt and either raise a debt fund or it's starting. Things are just starting to meld together all over fintech. And so what we thought of as, all right, this is solely a VC or solely a bank or solely a fintech, it's now they're all doing multitude of things. And I think it's really, really interesting. And I think it's good. It's healthy for the ecosystem overall. Yeah,
and Cross River Bank has continued to crush it. I saw they've got $13.5 billion in assets. I think when I first met Gilles, they were like a couple of $100 million, and they are doing exceedingly well. Have become, they've really become the go-to, bank. I mean, they've got competition. Obviously, there's others in the space. Webbank actually preceded Cross River in the lending space, and they also do other things. And there's a handful of others now that are trying to, they're trying to kind of work in on Cross River's turf, but Cross River have a pretty well-established brand now. And
Cross River launched in 2012.
No, they it was right around the financial crisis, like 2008, I think it was.
So they're
really
early. Yeah,
they were early, and then they did their deal with Green Sky in 2009, and that's actually, how Gilles kind of, they did this. He didn't, and then he did. If you remember a company called Peerform, they in fact it was the Peerform CEO that told Gilles he's got a great thing going with these lending, with this whole lending business. He should really focus on it, and that was part of the impetus for Cross River to kind of get into the lending space. Anyway, let's move on. I want to talk about my favorite topic, overdrafts, and or how much I hate.
You are passionate about them.
Yeah, I'm passionate about overdrafts. It's the third week in a row we have talked about overdrafts on the news show, because there's just news. There's continues to be news, and when there's news on overdrafts, I want to talk about it. And,
sounds like you've been burned on this a couple times.
Well, yeah. I mean, I'm back when I'm in my struggling entrepreneur days in the early mid '90s. I would I overdraw my account from time to time, and it was brutal. I mean, I hated it. You overdraw your account on like a $50 check, and suddenly they overdraw that, and then it's just, I hate the whole thing. I think it's a ludicrous system, and it's going to change, and it is changing before our eyes right now. And I love the American Banker piece. So the story this week is Regions Bank and Citizens Bank. These are two, what do you call them? Super regionals, I guess. They're big. They're like Regions is in the southeast, Citizens in the northeast. And I've got I interviewed Brendan Coughlin on my podcast just last week. That'll be coming out in a couple of weeks. He's the head of consumer banking at Citizens, and we didn't actually talk about overdrafts, but this was interesting because there's a chart in the American Banker article about this that shows those banks with the highest percentage of their non-interest income coming from overdrafts, and the highest by far is TD Bank. TD Bank need to get their act together, because they got
really
30 it was like 33%, I think, of their non-interest revenue comes from overdraft fees.
Wow.
Yeah, that's
not much of a future.
Yeah, I mean that is going away. I mean, it's clearly, and I think
I'm still surprised it's taken this long to get, because the product hasn't really changed forever.
Well, Peter, I think you're being too kind in saying it's ludicrous. It's I can think of a few more stronger terms that are not used right now. The fact is, you got $50 in your bank, and you write something or take out $60, and then you get a hit with another $50 fee, and it just makes no sense. It's just pure customer abuse, and banks should have stopped doing this a long time ago.
Yep.
It's absolutely ridiculous, and the thing is, it's like crack cocaine. They're addicted to it.
Yep.
They don't want to give up that revenue, because where are they going to get it from? And what are their options? Closing branches and letting people go. And it's tough for them to do that. That's, they're banks.
Yep. I feel like, but I do like what Colin Walsh said in his keynote a few weeks ago at a USA event. There's good bank revenue and bad bank revenue. And what you want to do is focus on your good revenue. And he talked about bad revenue as being, this is back when he was working at American Express or Wells Fargo. Well, it was Wells Fargo, I think it was, when he was talking about that. And just, this is bad revenue. The people who can least afford it are having to pay this. I mean, like Aaron Klein from the Brookings Institute, he has really done a couple of heavy hitting articles and studies about this. And I'm going to have him on the podcast later this month. I'm very excited about that. He has talked endlessly about this is just banks ripping off consumers, and it should not have been allowed. the way it is right now. And so anyway, let me at least describe what they're doing. So Regions is going to talk. They're talking about now. Oh, they're going to post credits before debits. Well, excuse me, that is something that should never have been any other way. If you've got credits pending and debits pending, why on earth do you process the debits first? The only way you do that is to gouge your customers. And so he said they're going to stop that practice. Whoop-de-doo, finally. And I think, and then Citizens have not really given much other than the fact they're looking at it and they're going to be making some changes.
You need to do a podcast on banks gone bad and just highlight all the idiotic things that they do today, because it's too many.
Well, after this, when I saw this article, I said, okay, I'm now going to start keeping a scoreboard of the banks that are actually addressing this, because it's, like they all need to end. I mean, this is one of the positives about fintech. There's no way this would be happening without the likes of, Chime and Moneyline and Varo and all the other big digital banks that don't have overdraft fees. I mean, SoFi doesn't either. And it's just, if you overdraw your SoFi account, what they do is they just reject the transaction. And it's like, okay, that's fine. Just reject the transaction. You're doing it anyway. That's what you're doing anyway. Why charge a fee for that?
Can you imagine TD announcing to the board of directors that they're going to cancel 33% of the revenue next quarter? I mean,
they'll have to.
What do you do?
Eventually, they'll have to. I mean, they're going to have to. They're going to have to really be more creative. And, going to have to look at...
we'll see how quickly banks become, quote unquote, agile with products when they're forced to make up this much money.
I mean, this is going to take multiple years. But this decade, I think by the end of this decade, overdrafts will be a strange fee that a few small banks charge, and that will be it.
I'd be curious to understand, how many people know like that overdrafts are going away, just generally in the public. Like they can get away with this for significantly longer. Like it's going to be such a slow rollout of either new products or overdrafts going away. It's like they're not going to just, it's not going to shut off overnight. It's going to be like this. You're going to have to pull them kicking and screaming, basically.
Meanwhile, Chime is
like your parents who paid for AOL just to keep the email address, right?
Yep.
Right. So with one thing I want to what I was going to say was that we have like the whole thing around overdrafts. I think once Chime gets to like 50 million customers. And I'm not going to bet against that happening. Once Varo gets to like 20 million customers, I mean, you're going to have a good chunk of the population in digital banks. Then there just won't be any revenue for overdrafts, because people are just going to, I'm closing down my TD bank. How many people are closed down their TD bank account every week because of overdraft fees? I'm sure then when they see these other options, that's just going to become a flood. And so it's going to dwindle because there's no future in it. As how I look at it. Anyway,
I think we're looking at least 10 years.
I bet before the end of the decade it'll be a strange. It'll be a minority of banks. But anyway, well, I could talk for the next 7 minutes on overdrafts, but I'm not going to.
Next week you can come back again.
I'm hoping something happens next week so I can talk about it again. Okay, I want to talk about Adyen. They are major payments processor out of Europe, and they are now in the US. I had their head of the US on the podcast. I think it was last year. Really interesting company doing. They're taking like they've got some really major brand names that they're processing for. Microsoft and Uber and I can't remember Shopify. I think I can't remember some of the others. But anyway, they here it is. It was, and Facebook. So they have a banking license. I didn't even know. I don't know about you guys, but I have never heard of the Federal Foreign Branch License. You guys heard of that type of license?
No, I mean,
Nope.
I had to think about it for a minute. We actually did write something about it a few days ago, but I missed it in all honesty. And then you're right. I saw that. I was like, what is that? I did notice that there were some certain restrictions.
Yes.
License, but I think it was crypto and digital assets was the big one.
Yeah, and they can't do that. And there's additional requirements if they want to process certain things. I think and then there's payments. There was one other thing where they have to have, they can still do it. They just have additional requirements because they're a foreign company and they're going to operate a branch in San Francisco. And so this gives them the approval to operate a branch. I don't know what the heck this branch is going to do. It's not going to be go and open up a checking account or a savings account. It's going to be for their merchants. But they need to have a physical presence here, I guess. And the OCC's already approved it. The Fed approved it in May, and it's going to happen. So kudos. I learned something new today yesterday when I was looking at this and thinking, oh wow, federal foreign branch license. Who knows how many other licenses of those kinds of things?
Oh, there's just so many licenses. Yeah. I mean, I saw one of the pieces Andrew had the other day, I think on the House Financial Services Committee or something like that. And it was like a list of like 87 different things that they were considering. It's like, this is the reason why things take either forever or innovation so slow at times. It's like there's all this minute little regulatory or this requirement or that, subsection C of 407B.
Well, don't get Andrew started on the House of Financial Services. You can talk about that all day.
Yeah, that's true.
Yeah. So you're absolutely right, Todd. I agree with you. The minutia.
Yeah. So, but you did write a piece about the SEC, right? What they've got a regulatory agenda. Why don't you tell us some what your thoughts are there?
Yeah. So this one popped up last week, and there were a couple things that caught my eye. I'm hoping that we're going to do a follow-up on it next week, I believe. But this is effectively the Gensler tenure and what their regulatory priorities are over the coming months. Now, whether they'll address them all and in what order, I don't know. But at the very top of the list was exempt offerings. And they specifically mentioned Reg D, and they also mentioned the definition of an accredited investor. And while it doesn't say what they're going to do, you have to assume that they're not going to broaden it. They're probably going to restrict it. And that always gives me pause for concern because, I look at Reg D, and Reg D has been a highly effective market. Yep. It's the top security exemption for private companies. It's a $1 trillion market on an annual basis. Basically, every single really promising early stage venture in the United States utilizes Reg D. And my worry, and they haven't said they're going to do this, is that they're going to require additional disclosure, which will increase the cost. I don't know what it is. I think it's something to keep an eye on. As well, I would be concerned that they would, tighten the restriction on the definition of an accredited investor. And that's something that I have always believed should be based on sophistication. It shouldn't be a wealth metric. It should be that if you know what you're doing, you have the education, your background. If you're teaching finance at Columbia, I think you're sophisticated. If you're a securities attorney at big law, you're sophisticated. It should be a metric based on knowledge, not on the size of your bank account or your monthly pay. But I worry that they're going to restrict that further, and I think that could be a movement in the wrong direction. There's a couple other items on there that caught my eye. We obviously do not have time to go into all of them. They have some ESG stuff, which could add cost to reporting companies. Which I think has been widely anticipated. Gamification. Gamification is something that has come up with Robinhood time and again on the Hill within the halls of the regulators. So we can expect some things on that. And there's some other items in there that I think that they're a little bit more nuanced, but they could have an impact, which could lead to more regulation, more restrictions, probably leaning heavily on investor protection.
Right. Well, anyway, we are just about out of time. Before we go, we haven't talked anything about major funding rounds this week. And I just want to mention the biggest one that I found was Ebanks. They're a Brazilian company. Then they raised $430 million. We had their CEO at our LATAM event just a few months back, and they are they're a payments processor and doing extremely well, and did 150 million transactions last year.
Wow.
And this is going to be they're going to do an IPO in the US, and they're going to use some of this money to pay for that. But anyway,
LATAM is hot.
LATAM is still hot. I love LATAM. Anyway, that's all we have time for today. Thank you, everybody, for watching. We'll be back same time next week. Until then, have a great weekend, everybody.
Yeah, thank you for having me. Good to see you, Peter. Good to see you.
Yep, good to see you.